Senator Smith from Minnesota is recognized online.
Thank you, Chair Brown, and thanks to our panelists for being with us today. My first question is for Mr. Reiner. So some people, I think, mistake crypto for sort of this niche, enthusiasm-driven market. And while that might have once been the case, it's important to realize that it is now last year, $2 trillion in market value was lost. And I think that demonstrates how mainstream this has been. And I think it is also a good reason to be wary about the risks that this growth poses to consumers and to our economy. And this is why Senator Warren and I questioned Fidelity's decision to offer Bitcoin in 401k plans. And we recently have been pressing regulators about banks' exposure to crypto risks. I start from the place that people are pretty much free to invest their money or to bet wherever they want to, and that includes crypto. But I am really concerned about the potential for these highly volatile assets and risky assets to get into our financial system and what impact that might have if there is a collapse for future crypto collapses. So, Mr. Reiners, in your written testimony, you said that the failure of crypto to fully integrate into mainstream finance is due to a combination of luck and prudent action by a handful of regulatory agencies. Could you talk a bit more about that? Just how lucky were we, and what should we be doing as policymakers to avoid relying on luck as we look at future crises?
Yeah, thank you for that question, Senator. And before I address it, I want to quickly touch on the financial inclusion element that's been talked about in this hearing. There is no evidence whatsoever to suggest that crypto promotes financial inclusion. And in fact, there's overwhelming evidence to suggest the exact opposite is happening. Most people who've invested in cryptocurrency have lost money. Of those people, a plurality are minorities and low-income Americans. Okay, so this is an example of predatory inclusion. We saw the same thing with subprime loans leading up to the 2008 financial crisis, where low-income and minority communities are being explicitly targeted with very, very risky products. And unfortunately, they have lost, in many cases, everything. Now, to your point, Senator Smith, about limiting the connections between crypto and the traditional financial system, we did luck out to a certain extent. I would point back to the fall report from the Financial Stability Oversight Council, and where they said, listen, the crypto market can be systemically risky given two things. One is size. Obviously, the bigger the market, the bigger the risk that it poses to the rest of the economy. And then two is the connections between that sector and the traditional financial system. And the industry has been trying very, very hard to integrate into mainstream finance so that the two are essentially indistinguishable, which I find ironic, given that the whole premise of cryptocurrency was to bypass banks and the traditional financial system. Now they're desperately trying to get access and make themselves seem as if they're legitimate. And they use the same terminology that we're accustomed to with traditional financial institutions, right? So broker, exchange, bank, but they're not. These things have meaning, and they're using these words intentionally because they want you to think that they are regulated and just as safe as these traditional institutions, okay? And in some cases, for instance, Voyager, they were lying about the fact that they were FDIC insured, and then they had a cease and desist order sent to them by the Fed and the FDIC. So I would just run through the list. You mentioned Fidelity attempting to put Bitcoin into 401ks. Would we think it's okay if they just let Powerball tickets end up in our 401ks? Again, crypto's just gambling. And so thankfully, the Department of Labor has sent out a letter saying that it'd be a violation of fiduciary duty for plan administrators to offer, or that they think it would be a violation of an administrator's fiduciary duty. And that, again, restricted, I'm sure, a lot of employers from allowing their employees to invest in crypto. Look at FTX. They had an active proposal in front of the CFTC that would allow them to offer retail traders 24/7 access to crypto derivatives on margin directly without the need of going through a broker or futures commission merchant. Again, if the CFTC had granted that proposal, as it appeared likely that they would have, this FTX situation would have been very, very different. Again, multiple attempts to list a ETF that tracks Bitcoin. In fact, Grayscale has sued the SEC for not granting them that permission. Again, just think of how many investors would have lost money, more money, if there had been a Bitcoin spot ETF on the market. So we kind of lucked out here a little bit, Senator, because we had agencies, at least some agencies, that were willing to do the right thing, even though in many cases it wasn't popular. And I think going forward, we need to have a clear regulatory framework, as I address in my written testimony, to make sure that crypto doesn't integrate into the traditional financial system, because they are continuing to try and they will not stop.
Well, you just laid out, I think, so many of the concerns that I have with this whole with this whole field. And as you say, there's sort of this imprimatur of reasonableness and trustworthiness because of the terms that are used and because of the ways, and as you say, the very typical financial terms that people are sort of familiar with. Yet you take this thing that is supposedly, we've been calling it a digital asset, but it's not clear to me whether many of these so-called assets are not just a bet, because maybe this will just go back to this for 1 minute. If there's no underlying value, then you are really just betting on whether it's going to go up or go down, whether you're going to win or you're going to lose. And that, I think, is my great concern. And I appreciate your comments on how it does seem to me that in this field there are there are people that are being a lot of people that are losing money and are being taken advantage of when they should be know that in this category that there's some basic consumer protections that are going to protect them. Thank you, Mr. Chair.